Welcome to Africa Ascending, a podcast series looking at key issues affecting the African business environment, and more particularly its impact on the insurance sector in Africa. Hosted by Afro-Asian Insurance Services and Africa Ahead, in this series we'll be looking at everything from water regulations, currency devaluation, and climate change. To access this podcast in other ways, we will be appearing on Africa Ahead at www.afapublishing.com, Spotify, and on the media page of afroasian-insurance.com. My name is Liz Booth, and I'm the editorial director at Africa Ahead. With me, I have
Uday Patel, Chairman and CEO of Afro-Asian Insurance Services Limited.
Today, we're talking about how can the African insurance market redefine itself and remain more relevant for the buyer of insurance. To do this, we have Thabo Twalo, Chief Underwriting Officer at Santam. Thabo has been with Santam for more than 3 years, and before that, he was with Munich Re for some 14 years, and with Swiss Re for more than 6 years before that. And we have Lena Adu Kofi, who has been CEO of Safety Insurance Brokers for almost 25 years, celebrating that milestone in July this year. So welcome to both of you. Let's ask the big question first. How can the African insurance market redefine itself and remain relevant for the buyer of insurance? Thabo, how do we start that conversation?
Yeah. Thank you, Liz. And I think obviously as an underwriter, I might come at this from a product perspective. So I think we do need to redefine ourselves as an industry. What I can say is that we sell an unseen product, right? And so trust becomes quite an important feature of what it is that we sell. And we effectively sell a promise to our clients, and this promise usually comes wrapped up in a big fat contract with all sorts of T's and C's and all sorts of clauses which the customer might feel is drafted from the perception of the insurer or drafted against them. We also usually have a fundamental issue, which is that the product that we are talking about, there might be a perception gap between what the insurer is buying and what the insured is buying and what the insurer is selling, and so we have to overcome that challenge. The product also is something that you interact with really only when something goes wrong, right? When something is bad, which may happen, once every 2 years, it may happen once every 5 years, it may never happen. So we've got this product that you really rarely interact with unless something really goes wrong. What we see, maybe from a customer perspective, what we see is big insurance companies that appear to be making lots of profit, and when we have a claim, we may or may not get it paid up. So that's maybe what's going on in our head. And what we don't see is the fact that if you look at insurance is actually it's an enabler, right? Firstly and most importantly, it enables peace of mind. So peace of mind today, not at claim stage. It's the comfort that I know that if something does happen, that I have an insurance product that's there to cover my back, that's there to help me bounce back from disaster. That's really the key of what it is that we're selling, and sometimes that gets lost. It's not just we're not just paying for the claims. I think also what we don't see is that if you look at the financing your home, financing your vehicle, insurance enables that, because if you have insurance, then the lending institution has more confidence in financing your endeavor, your business, because they know that you have the backing of this insurance should something unforeseen happen. And it's exactly the same thing with business. So insurance is not just something that pays claim, but it actually is something that enables your business process. So that's something that we need to that we need to highlight even more, because sometimes it's also a little bit unseen. And maybe finally, I think sometimes what we don't see is that insurance is also a gateway, not just to what I've mentioned here in terms of enablement of financing, etc., but through the fact that we have an intermediary and professional insurance companies. It's a gateway to accessing a lot of valuable information for the running of your business, for the safety of your household. And here I'm talking about the role of brokers specifically. And this is not something that comes through because perhaps the brokers also have the image of just being salesperson, not actually advice giver. So I think as an opening, I would say these are some of the things that we need to work to redefine as an insurance fraternity.
And thank you. Lena, would you agree with that as an insurance broker? Obviously, Thabo mentioned brokers that are there at the end. How do you feel your role is in terms of product relevance, and how important is this discussion in the light of the African Free Trade Agreement and the potential regulatory change for insurers that are going to follow?
The coming of the AfTA, the African Continental Free Trade, is going to bring a lot of changes. But again, you're right. Brokers have a crucial role to play, especially with the oncoming of this same AfTA, because at the end of the day, as much as brokers, as Thabo just said, are salespersons, I think we've gotten to a period where if brokers continue to become salespeople, we will become very extinct very, very quickly. Because now there are many, many channels of distribution out there. We have the bank assurance that have come into our space. We have the insurtechs, the fintechs. We have all manner of stuff that laws allow to come into the space of distribution. So for the traditional broker, we have a duty to shape the future of insurance by ensuring that we promote innovative, market-driven products. We can do this in collaboration with the insurers. But not only that, in light of AfTA, what it means is that the collaboration must go beyond borders. It must travel to all the various countries. And when you come to Africa, if you take us individually as countries, you realize that the capital for the insurers are quite small. And if that indeed is the issue, then it means that we need to find ways to risk pool, regional risk pooling, so that we will also be able to give some of the solutions that people need out there. Recently, there was a very big fire in Ghana at what we call the biggest market in Ghana, Katamanto, and millions of dollars, if I may say, of Ghana cedis was lost. Most of these people did not have any cover. The reason why they did not have any cover is because the insurance companies go in there, they look at the risk management, they look at the risk profile of these people in open markets, and they don't have the appetite to insure them. So what do? I think it's really up to the broker, because at the end of the day, it's the broker that has that deep insight and understanding to what these clients need. We need to go down to the clients and listen to them, and make sure that we collaborate with the insurers to tailor-make, to innovate, and bring in those products that they will be interested in buying. I agree with Thabo when he says that there's lack of trust as well. There can be trust when we listen to the clients and give them what they want. More and more, I'm finding that off-the-shelf products is not serving the purpose of our clients. So as a broker, I get very frustrated when I'm with a client and they want some unique something and I cannot provide it. Indeed, that is part of why we are excited to partner Afro-Asia, because if it's not there, we can quickly jump into the Lloyd's market through Afro-Asia to be able to bring it on. But more and more, I think that brokers do have a part to play. And what has become interesting, if I may share a Ghana example, is that brokers in Ghana are also not just waiting for the insurers to design these products. Brokers are also going forward to design their own products. All you have to do is, when you do so, you just have to partner an insurance company who has the appetite to be able to give you that support. So with the oncoming of the after, I think a lot is going to have to be done. We have a long way to go, and the regulatory framework is going to change, because as it is now, each country have their own rules, and they're just so everything is very, very disjointed. But if we can pull together as a whole continent, I think there's so much more that we can do. And yes, I believe that brokers must lead this charge. And I think some of us have started doing this in Ghana. If there's opportunity, I could share a couple of examples of some of the things that we have done. Thank you.
We all have identified what it is that the insurer can do and what the intermediary can do, but the facts are for everyone to see. The insurance penetration rate, leave South Africa out of the equation, but for the rest of Africa, you're talking about 1.5% insurance penetration.
Mm-hmm.
Are we not missing something? Is there some key element we are missing and not taking advantage of to grow that substantially?
I think you make a very astute observation, and I think we have to look also at the context in which insurance thrives, but specifically when we talk about insurance penetration. Insurance thrives, in my view, there's two conditions that are important. And the first one is usually there is a big outlay of cash. This outlay of cash or money happens either at an inception of some other endeavor, I'll get into that in a second, or it happens at a loss stage, right? So my dog bites my neighbor sues me, and then I have to pay, and there is this big outlay of cash that is necessary, and that condition then finds itself to be rife for insurance to exist. So again, I spoke earlier on about financing of business. So for a lending institution to outlay a certain amount of cash to finance my business, I need to have some sort of insurance in place. Therefore, that provides fertile ground for insurance to work well. The second condition that is usually necessary is there must be some push. Right, insurance is a grudge purchase, but if there is a push, either because from a regulatory perspective, insurance is compulsory, right, and we have plenty of examples of that across the world. So it's insurance being compulsory, and therefore I have to purchase insurance, or again going back to the lending institution that requires it as a condition for lending. So these two factors are not always prominent in the markets that we serve, right? Sometimes we don't have a framework that forces people to purchase insurance. I know in South Africa we have that issue, but it's not unique to South Africa. And then sometimes these cash settlements are not there. And if you think about how our economy operates in large parts of the continent, it's not necessarily credit driven. So because it's not credit driven, there's a lot of investment. So if I want to build a house, I will save. I will build maybe use my savings to build the first 2 bedrooms of that house, and then over time I will add to that. So there is not that big one outlay of cash. What I don't realize is that, once I've gone through this process, at the end of it, I actually have something of value. And this is the gap that I think we need to, as an insurance market, that we need to cover, is we need to show our customers that actually what they have is a lot of value. And maybe an example that might resonate a little bit better is in our household, right? You purchase your furniture slowly. So you purchase a couch, you purchase a bed, and then a new couch, and then a new television. And what you don't realize is that after a while, you've accumulated a lot of assets. And those assets actually create the need for you to buy insurance because they do need to be protected. And the problem is that you've accumulated them so slowly that you don't realize the wealth that you've accumulated. And I think part of the problem that we need to solve is ensuring that we make people aware of what it is, of the wealth that they do have, so which increases the need for insurance. Part of it, and maybe I'll let Lena go first before I go into it, speaks to how do we compel people to get insurance, and the idea of pooling, which Lena talked about earlier, speaks to that. But maybe, Lena, I'll let you go first, and we can come back to that.
Okay, so I'll pick it up from here on the penetration. Udai, as you said, yes, it's still 1.5%. It also depends on the various countries and their various laws. Here, we are having a conversation about harmonizing our laws, hopefully to go across a border, so that we can bring hopefully more of Africa into one pool. But when you go to different countries, for instance, when you go to Ghana, our penetration has, my 25 years, it's always been between 1 and 1.8. 1.8 is the highest. But what I realize is that every year my company is growing, and many more companies are growing in leaps and bounds. The reason is because of even how this is calculated. So it's all by the law. No, here we have social insurance, health insurance in Ghana. Everybody is entitled to take this policy, which is virtually free. Right now, we have about 46% of the population who have it. If we counted the health insurance within this penetration values, it will push it up. We also do not have the SECs, Securities and Exchange, the investments, all those other factors that South Africa would add to theirs is not also added to ours. So those are some of the regulatory things that give us problems. When you come even into our space as a broker, I need to get 3 different licenses before I can operate, which is ludicrous. Because at the end of the day, if I need to sell health insurance, I have to go to a different regulator. And then I have to go to National Insurance Commission for my normal insurance. And if I want to do anything in annuities, I also have to go to SEC for another license. This is all confusing. So we need to find our own harmony within our various countries before we can also push outside to do other things outside. Apart from that, also the laws within the same is these same countries that enable us to be able to have the compulsory insurances. When you look at recently the Act 1061 that Ghana passed, there is a whole myriad of compulsory insurances. Motor has always been compulsory, and now we even have marine, which is really fantastic, because when you go to other African countries like Uganda, Kenya, Tanzania, they also have this marine as compulsory, which will help this cross-border thing that we are talking about. Through our laws, we are able to do that, but it's just through these same laws that also cause problems for us. When you come to Ghana, we have infrastructural problems, because at the end of the day, if there was harmony, if we even decentralized, then we would be able to work with the local governments to bring people together to insure more. So the broker can do so much. The insurer can invest so much. But where are the opportunities? Unfortunately, some of the opportunities must be created through the governmental system and the infrastructures that we have. That notwithstanding, I think things are changing, and hopefully changing for the better. Hopefully we can get the opportunity also to talk about the fintechs and the new sandboxes that are being created within our space. That will hopefully allow us to be able to reach out to especially the informal sector. Hopefully we can get the opportunity to discuss some of them as well.
Well, I think since you mentioned fintech, if I can just put an idea out there, just rolling back to the beginning, Thabo, you mentioned that in insurance we are selling trust because it's an intangible product, and we're all, on this forum, we're all aware of the parametric way of selling of insurance, of cover of insurance coverage. Now, the reason parametric solutions are so popular is because once a trigger is reached, claim is settled automatically, even if it is in small amounts but regular amounts. Maybe with the level of AI, insurtech, the technology that exists at the moment, maybe trust can be enhanced if a product can actually copy that format, whereby an insured does not have to make a claim, but automatically gets a credit for a perceived loss when a trigger is reached. And maybe that can be rolled out to the personal insurance space or the commercial insurance space. I mean, we're way down the road, but that could be a way of instilling trust in people.
In fact, just to quickly come in, a client of mine about a month ago sent me an article on some group in India. These are older women who the job they do is they go out in the sun to collect scraps. And an NGO of ladies of about 200,000 women who have come together decided to fund and find some form of insurance for them. So this is like some form of a climate or weather insurance. So what they've done is on each day they earn $2.40. That's their earnings for the day. But the insurance is arranged in such a way that it goes with the temperature. So on the days that the temperature is very, very high, you get a trigger on your telephone and then you stay home. The next day you go and you collect $2.40. I don't know. I think that's in line with what you are proposing. Obviously, that will have to be done on a very low micro insurance level. And it's these micro insurances that will bring that uptick for us. It's not the corporate insurances. So I agree with you. We should be looking in that direction.
And I think I agree that parametric is a really great example. But to go back to Lena's point around the regulatory framework, there is with parametric the fundamental challenge, of course, is that the principles of indemnity are not always present. Mm-hmm. Right, and we have to overcome this hurdle. And depending on the regulator that you're dealing with and the type of product that we're talking about, very often this becomes a blocker that stops parametric insurance from.
Well, let me be very controversial here, Thabo. Maybe it is the principle of indemnity is where we are going wrong. Maybe a little amount of money often keeps an individual much more satisfied than indemnifying that person fully through a formal process.
Uday, I think it sounds controversial, but I would argue that it's not controversial at all. I think it would really, again, I think you put it perfectly to say instilling trust in our industry. That would really do that. If we can look at an independent measure of what the temperature was or the amount of rainfall was or the soil moisture in the case of agriculture, totally independent measure, and that determines your claim. And it's not determined by the same people that drafted the contract. Again, we spoke about this very thick contract document, and it doesn't have all the T's and C's that the insurer puts in there. There's a pure independent measure that determines the payout. And moreover, if we can overlay that payout is easily accessible, that it automatically comes into your bank account, as in the example that Lena mentioned, then we are really now dealing with the problem on the ground from a perception perspective.
And I think that is the more reason why we need to pool risk pool. Because at the end of the day, from what Uda is saying, if one company has to continuously be doing that, at some point they'll run out of money. But when the different companies come together and pool their resources, this risk then would be spread out, and it will make it much more attainable.
Thank you both very, very much. I can't believe we've had such a in-depth conversation in such a short period of time. So I really do appreciate it. And I think we've perhaps ended on a positive note and sort of solutions for the future to be considered. Uda, if I may, I'm just going to hand over to you to say goodbye. But thank you both, Thabo and Lena, for today's very interesting conversation.
Thank you, Liz. Thank you for the opportunity.
Thank you, Liz.
Thank you, Thabo. Thank you, Lena, for your invaluable contributions. And thank you to all our listeners on this occasion. I just leave you with this message that at Africa Ascending, we ask the questions which others don't wish to, and we try and find solutions. Thank you very much for joining us, and hope you join us next time.